Good morning and welcome to the Map Talk on what's hot and what's not in Tucson's economy. I'm Jennifer Pullen, the Making Action Possible or MAP Dashboard Coordinator, and I'm joined today by George Hammond, the Director of the Economic and Business Research Center. Today, George is going to walk us through the current economic trends in Tucson. But before we get started, let's talk about the details of today's webinar. The Map Talk is recorded. We record all Map Talks and post them later on the Map Dashboard website. You can revisit the Map Talk if you're interested and re-listen, or you can share it with your colleagues if you think they would find it interesting. Everyone will be muted, will be in conference mode, so everyone but the presenter will be muted. And at the end of the webinar, we will open up for questions, so we will unmute everyone. But if you have a question during the Map Talk, you can email it to me at any time. My email address is jkanipe@email.arizona.edu. I will then relay that question to George at the end of the talk. We'd like to thank our sponsors and partners that make the MAP Dashboard and these webinars possible. They include our sustaining sponsors include the Tucson Electric Power, Thomas R. Brown Family Foundation, Freeport McMoran Foundation, and our partners include the Community Foundation for Southern Arizona, representing the nonprofit community, Pima Association of Governments, PAG, representing regional government, the Southern Arizona Leadership Council, which represents the local business community, and Sun Corridor, representing local economic development, also the University of Arizona. We'd like to thank our media sponsor, the Arizona Daily Star. You can find MAP features in the Arizona Daily Star at the first Monday and last Sunday of each month. Don't forget to check out all of our recent feature articles on the MAP Dashboard. You can find these in the library section on the website. You can find that link just below the search bar up in the top right-hand corner. We've had recent articles on how renters fare in Tucson, how your Southern Arizona city compares. We look at 42 different cities within Southern Arizona. These include places like Bisbee, Douglas, Sarita, South Tucson, Tucson, Oro Valley, Marana, and we look at a variety of different measures across these communities. We've had articles on how local organizations use the map, and also white papers that University of Arizona faculty write and we publish on the MAP Dashboard. So you can find all of those in the library section. I encourage you to check out all of the different articles that we have available. And then finally, don't forget to engage with us. If you haven't already signed up for our newsletter, I encourage you to subscribe for our monthly newsletter. This is a great way to stay up to date on webinars, events that we have upcoming, new data releases, and new articles that we've published on the map. And also, if you're ever on the website and you have a question about the data, the information, you can use the Ask a Researcher form to connect with us, submit your question, and one of the researchers within the Economic and Business Research Center will respond to your question within a day or two. And with that, I'd like to turn it over to George to talk with us about current trends in Tucson.
Okay, great. Thanks, Jennifer, and thanks everyone for joining us this morning. Let's jump right in and talk about the key topics that we're going to discuss over the next half hour or so. First of all, the U.S. economy is in the midst of its longest expansion ever. One of the things that's happened over the past 3 months or so is that fears of recession have faded basically back to normal. At the end of last year, economists were very worried that the U.S. was headed for a recession in 2020, and that's no longer the case. Now, Tucson is definitely participating in the expansion. We're definitely riding that wave. Tucson is generating solid gains across income, population, and jobs. Now, while the outlook for 2020 and 2021 is positive, risks remain. And of course, the risk that's on all of our minds today is what will happen with COVID-19, which is the disease caused by the novel coronavirus. So we'll take a little bit of a look at some estimates for possible economic impacts that were put together early in February. And you want to keep in mind that there's a lot that we don't know about how this will play out in the future. So the impact estimates that we're going to talk about are very preliminary and imprecise. And there will be a lot of analysis coming out as we go forward over the next couple of weeks and months. So the Arizona employment benchmark is also coming up next month. The job data that we focus on during the year, that monthly job data, the unemployment rate, that data for the current and even previous years, so the data for 2018 and 2019 that we've been talking about, is all preliminary, and that gets revised, and it will get revised next month. The US job growth has already been revised to reflect the latest benchmark, and that was revised down by a couple of tenths in 2019. So the big question is, which way will the benchmark revision go for Tucson? In the past, we've seen fairly substantial downward revisions, and we'll take a look at where things are headed in 2019. Now, population growth is one key economic indicator of economic performance, and it's something that all economists track. Population growth in Arizona is strong. Gains in Tucson have been solid. They've been driven primarily by net migration because natural increase, that difference between births and deaths, is fading as a source of gains. And that implies changes in the demographic structure of the nation and the state and the local area. And that has implications for everyone, and we'll talk about a couple of those implications. So let's kick things off by talking about how Tucson is doing. And a great way to get a summary of that is to use the Tucson Economy Scorecard, which is available on the MAP dashboard. Now, the indicators that we track on the dashboard range from business growth, employment growth, housing affordability, median household income patents, all the way down to real GDP. The second column there shows the latest observation for each indicator. The third column over shows an icon-based ranking system. If you see a sun, then Tucson ranks in the top third of the 12 western metros that we track. If you see a partly sunny icon, we're in the middle of the distribution. A cloudy icon, we're in the bottom third. And a thunderstorm icon, where we rank last out of the 12 western metros. Final column shows the direction of recent change. So what do we take away from this? Well, there are a couple of bright spots in Tucson. Housing affordability is very competitive compared to the other western metros that we track. 66.2% of single-family homes that were sold in 2018 were affordable to a family making the median income. That's relatively good. In addition, Tucson ranks high in terms of patents per worker, and the patents are typically an indicator of the innovation going on in the local economy, and that's a good sign for Tucson. Innovative economies tend to generate stronger gains in the standard of living over the long run. Tucson ranks in the middle of the distribution in terms of real GDP growth at 3.6%, but 3.6% is well above the national growth. We don't do quite as well in terms of median household income, employment growth, or business growth. In fact, we rank last in terms of business growth, with no gain from 2017 to 2018. Now, we would like to see stronger business growth here in Tucson. We think that reflects a more dynamic economy. But business growth is not required to generate employment growth, as we see here. Existing firms can add employees and generate significant job gains on their own. So overall, Tucson has some bright spots and some places where we've definitely got work to do. So let's talk a little bit about Tucson in the long run. This shows Tucson employment from 1965 through 2019. And the gray bars that you see here are U.S. recessions. Now, the U.S. economy is in the midst of the longest expansion on record, and Tucson's definitely participating in that. It's not as clear that Tucson is in the middle of its longest expansion. That boils down to the exact data that we use and how smooth that data is. For instance, it depends on your view of, did Tucson actually experience a recession in the late 80s, early 90s, or was that just a pause in growth? That's your view of that episode, then Tucson has in the past experienced an expansion that lasted for 20 years or so. So that's a question that's hard to answer for Tucson, whether or not we're in the midst of the longest expansion that we have data for. But we are nonetheless in the midst of a long economic expansion. According to the preliminary data, we surpassed the previous high in the number of jobs sometime in 2019, We'll have to wait and see how the benchmark revisions affect that. But overall, Tucson is generating solid growth, and we are on the rise. So let's talk about what's hot and what's not in terms of job growth. This graphic shows Tucson net employment change from the fourth quarter of 2018 to the fourth quarter of 2019. Tucson generated the most net new jobs in education and health services. The vast majority of those jobs were in health services. We also saw solid job gains in leisure and hospitality. That's the tourism sector. Job gains as well in government, both federal and state and local. We also generated additional job growth in construction and manufacturing. In fact, that manufacturing job growth was relatively rapid at the end of 2019 here in Tucson. We were seeing the fastest job growth we had in more than a decade. That's good news for income growth because those manufacturing jobs tend to be relatively high paying. Now, the sector that's not hot at all these days is trade, transportation, and utilities. And what's driving that are job losses in retail trade. We are actually seeing job gains in transportation and warehousing, reflecting the location of Amazon and others here locally. But those job gains are not enough to offset the losses in retail trade. And what this is reflecting is this ongoing battle between brick and mortar and online retailers. Also reflects broader trends in consumer spending. We'll talk more about that. We also saw job losses over the year in professional and business services. That reflects job losses in call centers primarily. So overall, Tucson added about 7,600 jobs over the year in the fourth quarter of 2019. That translates into 1.9% job growth. That's faster than the national rate at 1.4%, but not quite as fast as the state or Phoenix. So what's going to happen with the revision? So this revision is called a benchmark revision. And essentially what happens is that BLS revises the preliminary data to more closely reflect the growth that we see in a really high quality data set called the Quarterly Census of Employment and Wages. What you see right here with the red line labeled EBRC benchmark, that reflects that growth in that higher quality QCEW data. You can see that that growth was somewhat stronger in early 2019 than the preliminary data suggested, but then somewhat weaker as we got towards the middle of the year. So, we may see that blue line come up to the red line early in the year, which is good news for 2019 growth, but then may flatten out as we get towards the middle of the year. So overall, we're probably going to see Tucson's preliminary data get revised down a little bit, just because that's been our history over the last couple of years. We've seen strong job growth get revised down to pretty modest growth. I don't think we're going to see something that big this year, but it's likely that we will see Tucson's revision to be slightly downward. Well, let's talk about what's on all of our minds this morning, and that's the novel coronavirus and the disease that it causes, which is COVID-19. We're going to talk about some of the research that's been done primarily early in February on the impacts there. And to generate an estimate of impacts, you have to make assumptions at this point, particularly since there's so much that we don't know about the virus. We don't know really how lethal it is. We're still trying to figure that out. We're not really sure just yet exactly how it's transmitted, and it remains to be seen how far around the world it will go. So the assumptions are that the disease will in fact spread around the world, but remain concentrated in China. We're likely to see hundreds of thousands infected with thousands of deaths. But keep in mind that's an assumption. Now that set of assumptions leads us to focus on China. And if we're worried about the impact of China on the world, we want to think about how China connects to the world. And it certainly connects to the rest of the world through global supply chains. So, lots of iPhones are made in China. Apple has mentioned that this has impacted their production and their earnings recently. But of course, China participates in supply chains for lots of things over and above iPhones and smartphones. Now, in addition to the global supply chains, China also affects the rest of the world through its demand, particularly its demand for raw materials, as well as intermediate and finished goods. China also affects the rest of the world through travel and tourism. So that's Chinese nationals visiting tourist destinations around the world, including in the US and in Arizona. So as we see Chinese demand drop off, that will have impacts and has had impacts on raw materials prices. It'll also have impacts on the demand for intermediate and finished goods, and we may see some of that in Arizona. The travel and tourism is a bit more of a wild card here. I'm not aware of any estimates of or any data on how important Chinese tourism is to Arizona. But we'll have to wait and see what comes out of that. And one way to get a feel for how the spread of the virus affects tourism will be to track plane traffic and passenger traffic through Phoenix Sky Harbor and Tucson International. So that's something that we'll be tracking going forward. Now, another way that this can all affect the global economy and our economy here in the U.S. and in Arizona is through financial impacts, and in particular through the impact on risk premiums. And as risk premiums rise, that tends to put downward pressure on stock prices, and that's probably part of what we've seen happening over the last couple of days, as it's become clear that the virus is going to spread more internationally than perhaps markets had originally thought, and that's generated pretty significant stock market impacts over the last couple of days. So, since what we know about the virus and its spread is pretty sketchy at this point, impact estimates are by their nature going to be imprecise. What we've got here are estimates put together by Moody's Analytics in early February. These were done by Mark Zandi, a famous economist. And his estimates suggest that Chinese real GDP growth will fall by 0.8% in 2020 relative to what was thought before the virus became apparent. So, if the forecast for Chinese real GDP for 2020 was 5.8% before the virus, it's now 5%. In the same way, the impacts of the Chinese slowdown are expected to reduce real GDP growth by 0.15% in 2020. So not enough to cause a recession. Let's take a minute and think about how the impacts might translate into something that would impact Arizona. Now, copper is a major export product and an important industry in Arizona. This graph shows you the spot price for copper. It's in dollars per pound. You'll notice that the spot price for copper falls pretty significantly from late 2019 into early 2020, and that likely reflects the impact of slowing Chinese growth. Now, what that means for Arizona, you can get a little bit of a feel here. This shows the U.S. cathode price. That's a price of copper. Notice that we have data through about the middle of 2019 when the price was in that neighborhood of $2.80 per pound. Imagine that line going down to $2.50 per pound. That would take us back to where we were roughly in terms of price in about late 2016. Now, copper production in Arizona has been on the rise. If the price decline is relatively brief, it probably won't have much of an impact on overall copper production on its own. But if the price decline ends up being an extended drop, or if the drop is larger than we've seen so far, that could start to impact Arizona's copper production. In addition, we all care about gasoline prices, and the slowdown in the Chinese economy has impacted crude oil prices and the price of gas here in the U.S., and we've seen a pretty significant drop. Now, that's good news for consumers in the U.S. and in Arizona. As gas prices fall, that leaves more money in our pockets that we can spend on other things. Now, Arizona does export to China, although those exports are much smaller in value than our exports to Mexico. Exports to Mexico last year were up about $8.2 billion, about $2.1 billion to Canada, and about $1.1 billion if we round up to China. So China's a distant third in terms of export performance. And just to put that in perspective, our exports to China in 2019 were roughly 0.3% of Arizona's GDP, so a pretty small share. Now, as we see the virus spreading through Europe today, really this week, notice that the United Kingdom is fourth, the Netherlands, Germany, France, also important destinations. So the wider the virus spreads, the more it impacts global economic activity, the bigger impact it will have on Arizona's exports and Arizona's economic growth. But overall, the impacts are primarily concentrated on China. That's not much of an impact on Arizona. So let's talk about population growth. This graph shows annual population gains. In 2019, Arizona's population rose by about 112,000 residents. That's 1.6% growth. That's 2 to 3 times the national pace. Phoenix grew even faster. Tucson actually saw an acceleration last year. Our population growth went up to 1%. So overall, population gains have been solid to very good here in Arizona. And they've actually been gaining some momentum, including here in Tucson. Now, this table gives you a sense of what drives population gains. And there are 2 major factors that drive population growth for states and local areas. One is net migration. That's, for Arizona, it's typically the biggest driver of population gain, at least it has been historically. Last year, net migration accounted for about almost 91,000 net new residents, about 67,000 for the Phoenix metro, and almost 10,000 for the Tucson metro. Now, natural increase is the other major source of population gains. Natural increase is just the difference between births and deaths each year. Natural increase was 21,100 for the state, 21,000 for Phoenix, and 600 for the Tucson metropolitan area. Now, what we've seen happen over the past decade or so is we've seen a major drop in natural increase. And what drove that major drop in natural increase is a huge decline in births. I call this Arizona's baby bust. We've seen Arizona births fall by about 20,000 over the past decade. Let's take a look at what that looks like in terms of birth rates. So these lines show you Hispanic and non-Hispanic and the overall average birth rates, which is births per 1,000 women of childbearing age. And of course, you'll notice that Hispanic birth rates are much higher than non-Hispanic birth rates. They're roughly double the non-Hispanic birth rate through much of the 90s and into the mid-2000s. But let's take a look at what happens over roughly the past decade. And what we see is major declines in birth rates, particularly for Hispanic women. Non-Hispanic birth rates fall as well, but not nearly to the same degree that Hispanic birth rates fall. So let's take a look at which, to the degree to which these declining birth rates for Hispanic and non-Hispanic women have contributed to the decline in births. And we're going to do that by looking at a couple of scenarios. These bars show births in 2017. And what we're going to do in the first bar is imagine what might have happened had the non-Hispanic birth rates not declined. So we'll let the Hispanic birth rates do what they did, which was decline, but we'll hold the non-Hispanic birth rates constant at the 2007 level. And of course, we get more births here. If we do that, births by this estimate would have been somewhere in the mid 90,000 range. Now let's do the opposite experiment. We'll let non-Hispanic birth rates evolve as they did, but we'll hold Hispanic birth rates constant at their 2007 level or before they made that big downward jump. And of course, we get more births, and we actually get more births than we did when we performed a similar experiment for non-Hispanic birth rates. So the Hispanic impact was actually bigger than the non-Hispanic impact. Now, had both Hispanic and non-Hispanic birth rates remained constant, we would have seen births remain around that 120,000 level, which was roughly where they were before the big decline began. So one impact of this baby bust is that it alters the demographic structure of the state, national, and local populations. So the baby bust is essentially combining with the aging of the baby boom generation to impact our demographic structure. And one way to see where we stand at the moment is to look at these old age dependency ratios. What these numbers show you is the ratio of the population age 65 and older divided by the population age 18 to 64. And these numbers are actually the ratios per 100 population, 100 residents in that 18 to 64 age group. So notice that the old age dependency ratio is relatively high in Tucson, a little bit lower in Arizona, and even lower still for the U.S. So Tucson is a relatively old population compared to Arizona and the U.S. Part of what's driving that, and part of what will drive that going forward, will be the impact of this baby bust combined with the aging of the baby boom generation. Now, one impact of an aging population is that it affects the amount and composition of consumer spending. Now, this graph shows some research done by the Kansas City Fed. And what they've done is to average spending by age group over the period 1983 to 2018. And these estimates are in 2012 dollars. And the way to keep track of the age groups is the middle age group is between age 30 and age 60, so 30 to 60. The younger age groups are younger than 30. The older age groups are older than 60. And what you notice is that the middle age group spends the most, and that's because earnings are highest during that period of our lives generally. The older age group, where our population is headed, spends a bit less. So the overall level of spending tends to fall a bit as the population ages. Now, population aging also affects the composition of spending. And what you see on this graph are 6 major components of consumer spending. That's health, household and household goods and services, rent, education and communication, transportation and leisure, and food. Now, the older age groups tend to spend relatively more on health, household goods and services, and rent. The younger age groups tend to spend relatively more on education and communication, so they're investing in themselves. They also spend more on transportation and leisure, and about the same on food. One thing to keep in mind here is that rent includes both, say, the rent of an apartment, but it also includes the estimate of the rent of an owner-occupied unit. So essentially what BLS in this case does is they make an effort to figure out how much it would cost you to rent your house essentially from yourself. So think of that as an estimate of the housing cost, not the value of your house. So overall, as the population ages, we tend to get relatively more spending on health, household goods and services, and rent, and a bit less spending on education, transportation, and leisure, and about the same on food. This graph gives you a little bit more detail in terms of the types of spending and really focuses in on the differences of the spending of older versus younger households. If the bar is above 0, older households are spending more. If the bar is below 0 or negative, younger households are spending more. For older households, they spend more on health insurance, as we would expect, on rent, household furnishings, medical devices, and medical services. Younger households tend to spend more on vehicle-related expenses, education, apparel, gasoline and food away from home, and recreation. So as we think about the implications of an aging population, it has implications for school enrollments, eventually college enrollments. It also has implications for the amount and the composition of spending, and that can impact tax revenues depending on what's taxed. Typically, at least in Arizona these days, we don't, typically services are not taxed, whereas goods are. So as a population ages, shift more of that spending towards services which are not taxed, that can create issues for the tax base. So the key takeaways from today: first of all, Tucson is growing and expanding. We're generating solid job gains. Those job gains are being led by education and health services. That's the hot sector. Retail trade jobs are declining. That's the sector that's not so hot. Overall, recession risks have faded over the past 3 months, but there's a lot of concern that's boiling up about the spread and impact of the novel coronavirus and of COVID-19, the associated disease. So that's something where there's a lot of uncertainty around what's happening and what's going to happen, and we'll just have to monitor that going forward. Overall, population growth has been solid across Arizona and here in Tucson, but we want to keep in mind that demographic structures are changing. We have both the impacts of Arizona's baby bust combined with the aging of the baby boom generation, and that will have wide-ranging impacts across businesses. So a few moments of shameless self-promotion. Keep in mind that we make available for you free our Arizona's Economy smartphone app. You can download that at the App Store and on Google Play. Allows you to track the latest data for Arizona, Phoenix, Tucson, all Arizona counties, and the U.S. Obviously, be sure to check out the map dashboard, sign up for our newsletter. Also check out our Arizona-Mexico Economic Indicators website. That gives you a very clean and clear sense of Arizona's role in border trade. Arizona's Economy online newsletter will keep you up to date with summaries of my latest forecasts, as well as the research going on here in the center. And keep in mind that the Economic and Business Research Center has won awards for our digital products. We've won international, national, state, and local recognition. Finally, keep in mind that the Economic and Business Research Center is part of the Eller College of Management. So be sure to check out our highly ranked MBA programs, including the evening, executive, and online MBAs, as well as our on-campus traditional MBA. So with that, I'll thank you for your time and your attention. Take care, and we will see you at the next Map Talk webinar.